Good morning. Welcome to the GlobalCapital SRI Forum and the first panel of day 2, in which we'll be looking at banks and sustainability. My name is Lucy Fitzgeorge Parker. I'm the editor for Sustainable Finance at Euromoney magazine. I'll be moderating the discussion today, and I'm delighted to be joined by a very experienced panel of speakers. So I'll start by asking them to introduce themselves. Luca, could you set the ball rolling?
Good morning from Brussels. I'm Luca Bertolot. I have the pleasure to run the EMF, the European Mortgage Federation office here in Brussels. And we are also leading the Energy Efficiency Mortgage Initiative, where we would like to convince every single consumer in Europe to renovate their house and get a better mortgage, a better price, and a better service. Good morning to everyone. Delighted to be on board.
Great to have you with us. Fabian?
Good morning. Thank you for the invitation. My name is Fabien Letenier. I work as a policy expert at the European Banking Authority, where I'm contributing to the different mandates received by the EBA to integrate environmental, social, and governance risks in the banking regulatory and prudential framework.
Okay, and Miguel?
Good morning. Thank you for having me here. Good morning from Pamplona. My work is in a cooperative bank, a regional cooperative bank in northern Spain, as head of capital market side. So I am involved, I would say, on the liability side of my bank, issuing bonds. But this is seen for us into the overall ESG strategy of the bank. So thank you.
Fantastic. Thank you, Miguel. And just one more thing before we get on to the discussion. We'll have time for a short Q&A session at the end of the panel, before the end of the panel. So if you have any questions for our speakers, please do let us know. You can submit them via the chat box on your screen, and we'll get through as many of them as we can in the next 45 minutes. So on with the discussion. The title of this session is How to Make Banks Serve Sustainability. And when it comes to sustainability, perhaps the biggest topic in the sector over the past year has been the push towards net zero and Paris alignment. And we've seen a lot of banks coming out with commitments to be Paris aligned by 2050, but so far not much detail on how that's going to be achieved. Obviously, it is early days yet, but what do we think so far? Fabian, what do you think? Are banks equipped for the net zero journey?
Well, in short, I would say that what we observe is that some institutions are taking steps to integrate environmental factors in their strategies, governance, risk management, or disclosures. But as you said, much more progress is still needed. So, for example, a growing number of banks are taking commitments to align strategies with some international agreements, such as the SDGs or the Paris Agreement or the net zero objective. And this is certainly encouraging, but as you said, banks will need to specify concrete action plans and disclose the progress made with KPIs and processes to monitor the implementation. I think one important point also is that for the banking sector to play its role in the transition and for the net zero journey objective, some preconditions are necessary. And one key precondition, in our opinion, involves to be prepared and robust enough to tackle risk stemming from environmental factors and climate change in particular, because this risk can materialize into financial risk over multiple, including long-term time horizons. And in that regard, we see a need for banks to more carefully integrate ESG risk into strategies, governance, and risk management. In addition, in order to be equipped for the net zero journey, metrics will be needed. And for example, the green asset ratio, which EU banks under the NFRD will have to disclose and which will be based on the EU taxonomy, can be used going forward to identify the share of banks' assets financing sustainable activities in the sense of taxonomy aligned. This will be important in setting and monitoring strategies and to promote comparability across banks in the net zero journey. Not only on the current exposures, right, but also to support the assessment of developments over time. So, of course, it is for the banks to decide on their strategies and approaches, but they should be transparent with their stakeholders about this strategy, and the green asset ratio should help to foster transparency. So, all in all, I would say that a more holistic and granular approach to manage, assess and disclose ESG risk and the ESG business profile of lending and investment activity is needed from the net zero objective perspective.
Okay, great. Well, Miguel, from a bank perspective, how does it look to you? I mean, where are you on the journey, and how do you feel about all the Well, as maybe we should get the regulation in a moment, but how do you feel about the progress made so far, and where the sort of challenges are going to be?
Well, yes, the answer to the question whether we are equipped or not is, of course, not yet. We are on that journey. I believe personally that the matter of ESG and particularly climate risk is a clear market failure from an economic perspective. That means that market by itself is not gonna solve this problem. So kind of intervention is needed. When I say intervention, I'm not talking just and only about the supervisory or legal intervention. I'm talking about a stakeholder dialogue. If we hear stakeholders, of course, supervisors among them, there's a huge voice telling us that we should care about this. For us, I think that for many banks, physical risk is not so urgent at this point of time, but transition risk is clear a big risk. And transition risk will materialize probably faster via legal and supervisory changes. So I do think that we as banks are much more worried today than we were 1 year ago. I'm not saying 5 years ago, 1 year ago. And I think this is a clear direction. So yes, we are doing lots of things. Probably some specific points, as Fabian has just mentioned, like GAR, the green asset ratio, will be key to show that the need to report on some key metrics will expose us banks to the problem of establishing a strategy and then being transparent about our strategy. And I think these changes or these key KPIs will be key for us to change.
Luca, do you have a perspective on this?
Yeah, I mean, I cannot add a lot from what Miguel just said, and Fabian. I think that Fabian was very right. We are in front of a revolution. I think the European institutions are doing the homeworks by saying to the market, I mean, we are in front of a massive revolution and we have to take action as soon as possible. The European leaders are telling this to the market, and the market is trying to adapt their strategy and best practices. But there are very concrete bottlenecks that have to be fixed, maybe not only European level, but on local level. Just to give you some examples, EPC register, where the information about the buildings, the energy performance certification are still not yet available for banks. Because we have a national register, and in some cases, in some countries, important markets, we have a regional register. So for the banks, it's very costly to reach this information and to provide this information in their disclosure strategies. So we are in front of a revolution. We have to work as a system. We have to build an ecosystem where the banks have to be aware that they can make the difference, because the banks are between the mentality of consumers, the mentality of investors. So we need to have a systemic approach. This is what we try to do as a federation, to line up agendas of banks, giving European, even global benchmark that everyone can align easily their IT system and their collection. So I think that we have to be aware that everyone has to do the homeworks. I think that the President of the European Commission is giving very strong signal. I think that will be part of also of the State of the Union speech that will be provided very soon in Brussels. And we have all the responsibility to play our role, and we try to do whatever is possible, but we need also the local institution to support us. And that's why we need to be coordinated. Thank you.
Okay, great. Well, you mentioned, obviously you mentioned mortgages, and actually this is a very good opportunity for me to find out some more about this, because I've been speaking to quite a lot of large banks recently about their net zero strategies and their net zero commitments. And I've asked them about retail and SME segments, and most of them have said, yes, it's too complicated. They're not getting there yet because they're focusing on corporate banking, investment banking, and the retail and SME segments are very challenging for precisely some of the reasons that you mentioned, Luca. So, but obviously here we have today three of you who are very well placed to talk about this. So, Miguel, I mean, could you tell us a bit from your perspective about how you're looking at retail and SME in the context of Paris alignment and net zero?
Yes, of course. What we call granularity, it's a problem for smaller banks. We, as a cooperative bank, we are financing, let's put it, 50% SMEs, 50% mortgages. So Luca will probably go deeper into the mortgage issue. If we talk about SMEs in Europe, we must face the fact that small and medium-sized companies are 24 million companies in the European Union, and we're talking big companies are only 50,000 companies in the European Union. So that means that 99.8% of companies comprising 2/3 of employment and 60% of value added are small companies. So this granularity means for smaller banks that we are financing the real economy, but that we need to get ESG data to first populate the data which the supervisors are asking us, but secondly, most importantly, to drive our strategy through a net zero objective. And so granularity is a problem. On the other hand, that's true that being so close to our clients, we can fight the problem of granularity with proximity, and then we can get a lot of data because we are very close to our SMEs, and the mortgage issue is the same. So I think we do have a big role to play. We are in a continent in which banking financing is key for SMEs. I would say that 95% of financing comes from directly from the banking system, and only 5-10% comes from capital markets. So we can complain about granularity, but we must take a responsibility and use proximity as a way to gather data and channel our strategy towards net zero. So we can do this in the future, but of course we will need the help, as Luca has mentioned, in some very specific cases in which we clearly need the changes to get information. But it's something which I think it's doable for smaller banks.
Luca, do you have anything to add on that on the mortgage side?
Yeah, I mean, I think that the small and medium enterprise are the secret opportunity of the European Union, because we can really link our housing strategy to the small and medium enterprise environment. What the small and medium enterprise can do for us, I mean, for example, they can provide energy performance information to the banks, but also we can maybe together with the support of the European investment banks, we can train workforces. There is a big discussion that, I mean, the housing supply is suffering. We don't have enough supply in the market because there is a lack of specialized workforces. So that's a fantastic opportunity for us to make a green revolution in the small and medium enterprise. We, as a European Covered Bond Council, we are proposing to the European institution a specific capital markets union instrument, which is called European Secured Notes, which is bringing covered bond techniques in the small and medium enterprise and oblige small and medium enterprise to produce energy efficiency ESG data. This is we want to be part of the solution, and I think that if we want to renovate 220 million of houses in Europe, we need to have the company doing the works, and they are an opportunity. It's a leverage for the recovery. It's a leverage for the digitalization, because those data can come straight from the small and medium enterprise to the banking balance sheet, and then straight to the investors. So we need to see where we have opportunities, and we have to factor all in this magic equation, which is the ESG equation. Thank you.
Fabian.
Yeah, I just wanted to say a few words on real estate portfolios, SMEs, and retail. I think there is an agreement that this is certainly a key part of banks' activities, and given their weight in banks' balance sheets, SMEs, retail, and real estate portfolios clearly have to form part of banks' approaches to ESG. I mentioned the climate-related risk at the beginning, and I think Miguel mentioned physical risk and transition risk. And that's one example where you can clearly see that real estate portfolios, for example, we play a critical role, because both from the physical risk perspective and the transition risk perspective, real estate portfolios will be very important. So that's why, from a risk management perspective, real estate portfolios, for example, if I focus on that segment, will be very important. Also, from a disclosures perspective, both for the prudential Pillar 3 disclosures, a breakdown of real estate portfolios of banks can be a relevant source of information for stakeholders. Also, for the green asset ratio, real estate and mortgages will be important. Now we are aware that there are clearly challenges, as Luca pointed out. So that's why in the EBA's recommendation to the Commission on the green asset ratio, we also recommended that the accessibility and availability of EPC's registers to banks should be improved. And finally, also from the prudential treatment perspective, mortgages are an interesting segment to look into. So the starting point for the prudential treatment is always the risk-based perspective. So that's why studies looking into specific potential specific risk profiles of energy-efficient mortgages are also very important, and we are closely following the research in that area. So all in all, those are very important segments, but there are also specific challenges, for example, to get data, and that's something the regulatory work should be aware of, obviously.
Luca, you wanted to respond to that?
Yeah, I think just to reinforce the point that Fabian raised at the beginning, the prudential aspect. I think the European Banking Authority is very right. There is a risk component that has to be analyzed. And I would like to make the game a bit more complex by saying when taxonomy will be implemented in the balance sheet of the banks, there is a lot of homework that have to be done by the banks. There are still gray area of taxonomy, which are creating a lot of, in French, I would say, casse-tête. So the banks are really trying to understand how they can be compliant with the taxonomy package. So probably the IRB banks that are working on risk parameters, they have to really go deep in the engine room of the bank and trying to understand the workout. What does it mean taxonomy? We are asking the banks to do a complete disclosure of the taxonomy portfolio. So if you go already on the energy efficiency mortgage label website, you can see banks disclosing the entire mortgage portfolio taxonomy compliant. I think that we should design the regulatory infrastructure in a way which will facilitate this huge effort the banks will have to do for implementing taxonomy. It's a credibility issue. It's a credibility issue of the European Union able to implement what has been agreed by the European Parliament. And I think that banks can do this, but we need the support of the European authorities. Exactly like Basel. I think there is a credibility issue. If we want to be credible at the international level, we need to implement Basel, but we need also to implement taxonomy. These two things are, and the weak point is how we will capture this from a prudential point of view. So I think that this is something we would like to raise this flag to the European Commission and the European Authority, saying we are here ready to help. We see the challenge. We know that we can accelerate the implementation, but please help us do the homework. So that's the point that we would like to raise.
Miguel.
Yes, very briefly, just to follow up on what Fabian and Luca had said. Of course, I'm aware that from a prudential perspective, a clear and deep studies need to be available to justify any kind of different treatment. And I've been following the academic research which has been published up to now. I think that at least three very interesting researchers pointing out in that direction. But just to give you the point of view from a day-to-day basis, from a practitioner or from a local bank, we have no doubt that renovated houses or energy efficient houses present a lower credit risk at the end for banks. For the type of, when a customer takes this renovation or when they buy a more efficient house, our perception is clearly that these mortgages will perform better. It's just, of course, and it's not anything which can be in an academic paper, but this is our experience, and this is where we are heading for. So we will wait until this is a reality, if it comes. But coming back to my point of market failure, this different prudential treatment is clearly a big signal which will incentivize a change in market behavior, not just from the point of view of banks, but even for the point of view of the asset owner, which is the client itself. So this would be clearly a game changer.
Miguel, also from the bank perspective, we're talking about the taxonomy. Are you? It's a big question, but are you do you think that from a bank perspective that is in its current form relevant and well designed and useful? Are there any issues that you still have around that?
Well, the taxonomy is a very complex regulation. To be implemented, we will need to begin with proxies and some kind of simplifications, there's no doubt, especially from the point of view of granular loan books, such as retail cooperative banks. For us, the average loan is a very small one, both on the SMEs and the mortgage side. So I do think that we need some kind of simplification. So we could live with this simplification. For example, for the SMEs, I think for the next year, green asset ratio, we will go for a kind of sectorial classification. And for mortgages, we will need to use EPCs. We are aware that the energy efficient directive is going to be updated. A lot of things need to come. It is a very complex regulation, I repeat, but it is much better to begin with a simplification of how to tackle the taxonomy than doing nothing. So my answer would be yes, it is very complex, but we should move forward.
Okay, and Fabian, we've had, Miguel was talking about some of the challenges of granular data in this respect, and obviously, I mean, data and information generally is a huge issue for every aspect of sustainable finance and energy transition. From your perspective, how do you see that? How can sort of regulation help with that, and how much work do banks need to do? Are they doing the work that's needs to be done?
Yeah, so that is a key question. But if you allow me, I would just say a very short answer to what Miguel said on the prudential treatments, because the EBA is precisely mandated to assess if a dedicated prudential treatment for certain exposures would be justified. And we are currently reviewing available evidence because, as I said, our starting point is a prudential risk-based perspective. So we'll proceed in two phases. Firstly, publishing a discussion paper to engage with all stakeholders before publishing our final findings, probably in 2023, according to the renewed sustainable finance strategy by the Commission. But in terms of sequencing, I think this potential adjusted prudential treatment will only come at a later stage, right? Then there are other things, other requirements that banks would have to implement. And in particular disclosure. So which brings me to your question, I think, on data and data challenges. And I think it's undisputable that there are clear challenges. And this is a key issue, data gaps, data availability. Because of course, banks need data from their clients and their counterparts. This is a key issue from a risk management perspective, because active measurement is a precondition for being prepared to achieve sustainability. And from a disclosure perspective, this is also a key issue. But there are also steps that can be taken by banks and by public authorities. So, for example, banks are in a good position to engage on a bilateral basis with their counterparts and to collect information, for example, as part of loan origination and monitoring of portfolios. Also, public information should be used as far as possible. And going forward, we hope that sustainability disclosures by corporates will be improved thanks to Commission's initiatives. So in particular, the Corporate Sustainability Reporting Directive and other supporting initiatives such as the European Single Access Point. Of course, when this is not enough, there is also the possibility to use private providers, so third-party private providers, and to make use of proxies or estimates when there are data gaps, as Miguel pointed out. So in that regard, EPCs are a good example, energy performance certificates, which can be used for disclosures on real estate portfolios. And this is an issue that we have been looking into as part of our advice to the Commission on the green asset ratio. On the part of regulators and public authorities, there are also steps that should be considered. To take one example, a sequential approach might be needed in some cases. So, for example, for the EBA's Pillar 3 disclosures, it has been already decided that the quantitative disclosures, or the quantitative templates, will be requested on the E parts, on the environmental risk And while the quantitative disclosures on social and governance risk will be only implemented at a later stage, because at the moment, quantitative data is more available on the E front than on the S and G fronts.
Luca, do you have thoughts on that?
Yeah, I think the challenge will be let consumer clients understand what is the advantage of having an ESG information on their product. I think that's we have done a lot of analysis around Europe, and I think that there is a very concrete impact on the disposable income of European citizens. If you make works in your house, the average work in Europe is around 25,000 euros on your house. Can I make a jump of 2 energy category, which has a huge impact on 2 key risk parameters for banks. Disposable income. We have analyzed what is the average impact of jumping of 2 energy efficiency category. Well, a client can save between 50 and 70% of the energy bill. It means that at the end of the year, 1 monthly installment of the mortgage is paid by energy efficiency. It's a huge mitigation of a risk factor. Then if we look at the asset, the impact on the value of the property is quite significant. For example, if you move out your property from G, the jump can reach between 8-10% of the property value. If you reach A, is also a jump of a similar amount. If you are in between, it's between 3 and 5% now. This is numbers that are coming from our research, from our economic research. So we are speaking about a substantial reduction of risk and mitigation of risk in the balance sheet of the banks. Every client not doing the works is a risk for the bank. So the bank has to go there and convince every single client to make 25,000 euros of works in their house to reduce the risk of the portfolio. So it's not only an ESG driver, it's a marketing driver for the banks. It's a marketing opportunity to reach every single decision makers that are not in Brussels, but are in the house of every single town. So you are a decision makers, and you can make a bit of a change by renovating your house. That's the key message that we have to build. This will build the ESG environment around us. This will move the revolution.
Miguel, you have the sort of closest contact with the consumers. I mean, how do you agree with that? Is this a great marketing opportunity, or is it going to be a struggle to bring consumers along on the net zero journey?
It is. It's true that the changes in consumer behavior require a set of measures. It's not just incentivizing price or giving grants, or there are also some kind of behavioral barriers, so to say, which are quite linked to age in our experience. So older generations tend to be more conservative or reluctant to take works, which I think any one of us can understand the reasons behind that, because works are inconvenient, they take time, and it's not just only money, which of course it is. So I think that we need a kind of one-shop approach to this, in which local authorities, banks, constructors. In the case of Spain, it is very important because we are a country of vertical construction. We need to put into the condominiums or the communities of owners. We need to bring them in, and perhaps some changes in the law too. So all these things have to be put together to make change, because at the end of the day, as Luca has pointed out, the decision is on the table of the local family, which has to decide whether yes or no. And so we need to put everything in a sense that we reach a tipping point in which most of the households are willing to do this. At that tipping point, there will be a big renovation wave. Now we are beginning the wave. And so we need to reach this tipping point. And for that, all actors have to be involved. I think that the EU Next Generation funds could be key. In our experience in our local markets in Navarra and the Basque Country where we operate, we know that this will be a high priority for the regional authorities and the national authorities too. So we expect a lot of funds coming from the EU Next Generation, and we think this could accelerate this process and probably help to reach earlier this tipping point.
And Fabian, from a regulatory perspective, I mean, I guess that consumer behavior isn't really your changing consumer behavior isn't your job, but do you sort of take that into account when you are coming up with the sort of the expectations for banks in this respect?
Well, so far, from the banking regulatory perspective, I think the work has not been focused on consumers in particular, but on the need for banks to engage with their various counterparties. For example, from the ESG risk management perspective. So I mentioned loan origination and monitoring, for example, earlier, and the need for banks to identify, for example, what data will be needed for them to feed into their systems, both at the loan origination phase, but also at the monitoring, at the ex-post monitoring phase of portfolios. Probably going forward, there will be new initiatives also on the Commission's, stemming from the Commission's renewed strategy, for example, on green retail loans and mortgages. And we are also expecting a call for advice from the Commission on the need to clarify what could be supporting tools, what could be the role of the taxonomy, for example, for these products. So this will be certainly a key issue in the next months or years.
Okay, well, Luca, you alluded earlier to the fact that this could create a lot of opportunities for capital markets activity. I mean, how do you see that developing where do you see it going with sort of banks in the capital markets in the light of the changes in regulatory and other changes towards Paris alignment?
Yeah, I think that all our members are changing their strategy and they are building ESG funding strategies. This is very clear if we look at the cover bond label website. We have more than 30 billion of bonds issued under an ESG flag. I mean, we have so every single bank is really thinking of how to issue green bonds, not only green cover bonds, but green securitization, green debt unsecured. And not only Europeans. What is very surprising in our website, you will discover that one of the highest volume is produced in South Korea. So other regions are issuing in a euro cover bonds to tap European investors. So this is highlighting the important geopolitical aspect of this ESG challenge for Europe. We are really trying to position the European capital markets project as a leading and as a benchmark for other countries. We have to take this with all the seriousness that is necessary. We are proposing a global benchmark. Brazilians, Canadians, South Koreans, Japanese are very much looking at what we are doing in the cover bond space. And our global activities, the ECBC as a global membership, is really capturing this kind of geopolitical role of the Capital Markets Union. Now, let's be honest. And let's mention the elephant in the room, in the sense that the Capital Markets Union is a bit in standby, in the sense that we have subsidies or very easy monetary policy interventions that are not making cover bonds or European secured notes very necessary. So the funding strategies of the banks are changing. Also, we have a huge amount of deposits in the belly of the banks. So the funding needs are really changing for the banks. I think that is important that we continue to build the Capital Markets Union, because when the oxygen of the European Central Bank will be removed, the market should be ready to support the making of the European Union. And the market is there. I think that in the last 10 years, we have achieved a European concept of cover bonds, which was not the case 10, 15 years ago. We have a cover bond directive that is about to be implemented in every single member state. So we are in the making of the Capital Markets Union. We should not stop here. We should continue to invest. And public support should be seen as a support, not something that will create an addiction to public support. So we believe that the private market, the private capital market, can help a lot the next generation and the European Green Deal. And that's why we want to be very propositive on the table of Madam McGuinness, on the table of what the European Banking Authority, we want to work with them to help them in getting disclosure done as soon as possible. So that will be my reaction. Thank you, Lizzie.
Okay, Miguel. Well, from an issuer perspective, from a bank issuer perspective, how do you agree with Luca?
Yeah, I totally agree. I would say one thing I mentioned before that the SMEs and of course mortgages in Europe are mainly financed by banks. But banks are financed both via deposits and via capital markets. At this point of time, when there is a huge or liquidity is so ample due to the monetary interventions and the like, you might think that capital market focus on sustainability is not needed because funding is really not a key issue for banks or for the economy right now. But I think you're wrong if you think this. In my view, we banks have a huge fiduciary duty. The fiduciary duty comes from the fact that we are lending other people's money. And so these people, be it depositors or bondholders or equity holders, have the right, have a 3 dimensions right, have a right to tackle risk, financial risk, to have kind of performance or profitability, and then they have a third dimension to have the right to know what the money is financing. And I think that capital markets, at least in my experience as a capital markets guy in a retail bank, which is financed mainly by deposits, these capital market exposures via sustainable bonds has helped us to leverage change in the institution. Because when you have a big stakeholder on the liability side of your balance sheet, which is clearly asking for you to become transparent, to focus on ESG, to finance green mortgages, to finance sustainable agriculture, social housing, whatever, then the organization takes note and the governance of the bank changes or improves. So I think that capital markets, sustainable capital markets, have a big role to play, precisely because Europe is a country financed mainly by banks. So I think it's not contradictory, and both things are very, very important for net zero transition.
And Fabian, again, from a regulatory perspective, what's your view on the ESG capital markets?
Well, what we observe is that the ESG capital or bond market is still relatively new, but it has been growing fast. I think from the regulator perspective, one point I could bring to the attention of the audience is also the need for green bank capital to ensure that institutions' own funds and eligible liability instruments issued with ESG features are still compliant with the CRR eligibility criteria and the BRRD requirements. So the EBA has developed recommendations on good practices and practices to be avoided in that matter. So the objective is not to prevent or to promote ESG issuances for capital or loss absorbency purposes, but to make sure that the interaction between ESG features and regulatory eligibility criteria is clear. So with of course, the purpose is ultimately to safeguard the quality of the instrument from a prudential perspective. So I will not delve into the details now, but I would encourage also people to have a look at the EBA's recommendation in that matter.
And Miguel, I agree. Green bank capital, is that something that you've looked at? In particular, green bank capital.
For the time being, we have been issuing sustainable covered bonds, but we do have expect to have an MREL requirement, and at least at our bank level, our strategy would be to issue MREL requirements via be it senior preferred or senior non-preferred via our sustainability framework. So yes, we intend to do that. As Fabian has pointed out, we are aware. And yesterday was a meeting or a conference regarding this. Capital or MREL sustainable bonds need to be in the texts and in the legal framework has to be very clear that there is nothing which impedes or hinders the provisions regarding resolution or banking resolution, of course. But this being said, I think that there is clearly a room for MREL-related issuance with a sustainable framework, because at the end of the day, it's a use of proceeds, and I think it's clearly should be acceptable. Of course, as I said, and Fabian pointed out, being very careful with the wording and with the legal structure of the bonds.
Okay, fantastic. Thank you. Well, Luca, I see we have a question for you in the chat box. It says one of our audience has written in you saying you make the case very well for energy efficient housing and mortgages, but is there any information on how the take-up is going and how many consumers are actually upgrading their homes?
Yeah, I mean, we have done in our initiative a consumer research together with E.ON, is one of the largest utilities that you have in Europe, and we have analyzed the different markets. There is a huge appetite in markets like UK, Sweden, Italy, Spain, Portugal, and sometimes the banking sector is not yet providing what consumers are looking for. So that's why we have created a specific label. So you can see on the energy efficiency mortgage label, we have 30 banks with 37 products on 13 countries, which is still too little to satisfy the demand. I have to say that we discovered that, I mean, consumers have been quite disappointed by public policy in trying to improve the houses. For example, in Germany and in Italy, the super bonus and the KfW, it's very complicated from a bureaucratic point of view. So we think that there is a lot of room for banks to create a kind of more flexible packages for consumer to help them to make their investment and sometimes going behind the bureaucracy of public subsidies. So we are designing our energy efficiency mortgages as a top up for consumer. The demand is huge and the supply is not yet there. We are also trying to see what is going on the other side of the channel, the UK market, which remains one of the largest European, if I can say European market. And over there, we see that potentially consumers can have a double benefit from banks and utilities working on the same sector. Because if you get a benefit from the mortgage or you benefit from the energy bill, you can really maximize your decision, as Miguel was saying. At the end, you have to discuss with your partner if you do the work or if you don't do the work. So if you save money with the mortgage and you save money in the energy bill, you will do it. That's what we try to do. We are working on the demand, and hopefully this will be also covered by the appropriate supply very soon.
Okay, one final question for Fabian, I think, before we're nearly out of time. But I was interested that Luca has mentioned a couple of times the events, things outside the EU, whether it's the UK, South Korea, sort of talking about global and European benchmarks on sustainability. And I just wondered, from a regulatory perspective, do you see the prospects for tension emerging between the European regulation in this respect for banks and other global standards or local, regional, local or global standards?
Yeah, so I think that's an important question. I can say that we are actively engaging in a number of fora with international peers. So for example, on the central bank and supervisory fronts, the Network for Greening the Financial System, the NGFS, gathers a large number of authorities at the moment and developing recommendations for banks, for supervisors, developing scenarios for climate stress tests that can be used by jurisdictions in the EU, but also outside the EU. On the prudential front, the Basel Committee has also started looking into climate-related risk. So with the some outcomes could be publication of practices or expectations that would apply at the international scale. And of course, if we are talking about regulations, I think one important fora is the International Platform on Sustainable Finance run by the Commission. And we're also looking into that and seeing with interest the potential, for example, to look into potential synergies for taxonomies, for green bonds, for benchmarks. So that is certainly an important issue to look into. At the same time, the EU has also taken the lead to some extent on the ESG space, and this is something that could certainly be pursued, and that also has a number of advantages for European banks and the European markets.
Okay, fantastic. Well, thank you, Fabien. Unfortunately, that is all we have time for today. But thank you all very much for your input and your time. It's been great speaking to you, and thank you also to all of you in our virtual audience for joining us. There will now be a short break, but please do tune in again at 10:45 London time for our second panel of the day: How is regulation changing ESG? And I myself will be back at 2:15 p.m. when I will be talking to our keynote speaker, Andrew Mitchell, the founder of GlobalCapital and the Task Force for Nature-Related Financial Disclosures, about bringing biodiversity into the capital markets. I hope you'll join me for that. Until then, goodbye and thank you for watching.